What's going on, Eagle investors? This is Samuel here for another episode of Trade Idea of the Week. Today we'll be discussing a long crude oil play using XOP, which is an oil and gas exploration and production ETF. So I'll be pitching the XOP August 20th $80 call option. Why should we go long oil and why should we use XOP? So this is from earlier in the week, expectations of a rally and a bounce back in crude oil prices after they fell 8% on Monday when OPEC Plus agreed to a supply increase of over 400,000 barrels per day, and the COVID Delta variant caused concerns around the entire market on the equity, fixed income, and in the commodity space. This was likely an overreaction looking at the supply and demand dynamics of the oil market and how tight the market is right now, with a much larger demand in the summer months than the current supply is even allowing for, even with this increase. Now, the XOP call option payoff is optimal as there's an asymmetric risk return. Now, if oil continues to dump, the loss is minimal. But if the upside actually comes to fruition, this can be a multi-bagger play and the return can be very substantial. Now, the target upside management plan. The first target would be aiming for the $90 mark, which would provide around 100 to 150% gain depending when that's realized in XOP. If oil pushes up quickly, like it seems to be right now, we could even target the $100 mark, which would yield 3 to 4 times the purchase. Now, management plan, if there's more chop in the oil market as well as XOP, you could cut it after a week if there's no solid move or conviction in the market. This would minimize the loss as it's an August 20th expiration, and then you wouldn't be realizing a substantial downside. Now, if oil has a few down days under the $66 mark or closes below 64, it would also look weaker and due for another leg down, and I'd look to cut this position. Now, in summary, going long oil at this oversold point appears to have a strong risk return, particularly if set up with an asymmetric payoff. The XOP August 20 $80 call option looks favorable, provided crude stays above the $65 handle. Now, again, XOP is this oil and gas ETF, and what that is, it's a mixture of Marathon, Exxon, Oxy Petroleum, all these companies. So you don't have the individual company risk, but you're getting coverage over the entire sector. And the sector also looks more favorable than just playing the crude oil prices in and of themselves, either in the futures market or on the options on those futures, as a relative, more volatility and oversold in that market compared to just the crude commodity price. Thank you all for watching, and I hope you enjoyed this trade idea of the week. Comment below what your thoughts are, and if you took this play, make sure to join our Discord community in the description below, and like and subscribe.